Good morning or good day, wherever you are. It's Tuesday, 26th of June. Welcome to Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, but for that daily, so let's have a nice start like every day. And like every day, we will start with our risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. This is our scheme. On Monday, it's Jay's Day. On Tuesday, like today, it's Paul's Day. On Wednesday, it's Giancarlo's Day. On Thursday, it's Marco's Day. And on Friday, it's Dirk's Day. Our leading day traders live every day to the same time. This is me. My name is Jens. I'm talking from the Berlin office from Admiral Markets. We are a big international broker, over 18 country offices. So my English made in Germany, but maybe my quality too. But I'm not the main speaker. The main speaker is the day trader of today. And of course, if you'd like to trade Forex and CFDs, you will get many benefits only with us. For example, DAX 30, one of our bestseller, triple spread of just 0.8 points during the main trading hours. Check all the details out on admiralmarkets.com. Yeah, and if you are living in Europe or if you are a client of Admiral Markets UK, the countdown is running. Soon, from 30th of July, retail clients in the European Union only have a maximum leverage for euro-dollar of 30 and for index CFDs of 20. But if you may be a legal professional client, you can apply the status, and you will see here the differences between a retail client and a professional client. Retail clients will get from 30th of July an unlimited protection against negative balances, and professional clients will have the benefit of our negative balance protection policy, protection up to 50,000 British pounds according to our policy. Check all that out. Here you see also the link, and if you have questions, feel free to contact us by phone or by email, and also the other channels like YouTube or Facebook. Everything is linked by admiralmarkets.com. There you will find also on our webpage something about our regulatory background. And now it's enough from my side. Now it's time for our day trader, Paul. Good morning, good day, Paul. What's your view to the markets today?
Good morning, Jens. Good morning, everybody. Thank you for the introduction. I hope you can all hear my voice. I hope you can all see my screen, ladies and gentlemen. So here we are, 26th of June already. Okay, so we're going to have an interesting week, namely because for those of you who are new to trading, what we're looking at is this week we're going to be, we're not only going to be getting the sort of the end of the month, okay, towards sort of Friday onwards, but we'll also be getting the end of the quarter and also be getting end of the half year. So I would expect to see some sort of some movements this week that may not necessarily be may not necessarily fit in with a simple TA picture, namely because of just asset allocation going on within the sort of the larger big players. But as always, they will always create opportunities for us. We just need to be prepared and ready for them. So today we've got quite a lot to get through, but I thought what I'd start is with having a little bit of a look at the overview of the indices to begin with. You know, we've had an interesting few days on the kind of geopolitical point. We've had the we've had a little bit of the trade war tit for tat with Trump and the EU, and then also with Trump and the Chinese. We looked at those Chinese markets last week, if you remember, ladies and gentlemen. If not, hopefully you'll be able to go back and check them on the YouTube channel. But, you know, we talked about that in terms of, you know, Trump sort of wielding his big stick and that having a knock-on impact around the global markets. And, of course, that plays through into the financial markets. You know, and what we saw over the last couple of days was, you know, we've seen that, you know, allegedly President Xi of China has been speaking to CEOs and said that, you know, that he'll be looking to hit back, and invariably that sort of hung over your indices. We also had a little bit of an EU summit at the weekend, which you know, which appears not to have really achieved a great deal of anything. But you know, I'm sure everybody had a lovely meal, and I'm sure the wine was fantastic. But of course, all of these things, you know, they weigh on investors' sentiment. And so what we saw yesterday, you know, from sort of Sunday night onwards, is we saw you know, a great deal of selling of the major indices. So here I am. Here, you know, we're on the MT4 Supreme edition here. those of you who have joined me before will know that I have lots of profiles set up for either for the currencies, or in this particular case it's for a market overview, so I can very quickly have a little look at the big major indices of the world and start to get myself a good idea of what's been going on. So here I have Dow Jones here, okay, then the S&P, the Nasdaq. I have gold there. I'll have dollar index or oil there. I've got the Nikkei here, the FTSE, and the DAX. So in a very quick way, I can take a quick look at what the sentiment is, and you can see yourselves yesterday. We had some great selling opportunities on the American indices across all of those major indices, but also across DAX and FTSE as well. We DAX, FTSE, and the Nikkei. We had some great selling opportunities. There's some fantastic sort of intraday trades going on there. But so when we have a day like that, okay, ladies and gentlemen, when we have a day like that where there's a real sell-off across the board, the next day I'm always just a little bit a little bit wary, because of course when that happens, there's when there's big sell-off like that, what we see is people take a little bit of time to understand and sort of process what has happened, and then look to sort of identify and decide what the next move is. So I think today's session, okay, both in the European indexes and also in the American indices this afternoon, is just be a case of a little bit of a watch and wait. Let's see what actually happens, and then it may be an opportunity that if there's more geopolitical news comes out, that invariably that sort of triggers a further barge of selling. So I would just be keeping an eye on that. Big day yesterday, okay. Sometimes it's you hear me talk about it all the time. Markets, they surge, they rest, then they surge again, and that's no different from humans. And they, even with the the algos increasingly sort of dominating market execution, that those human markets are still a reflection of all of that human psychology. We'll get a surge, then a rest, then a surge, and so it's your job as traders to sort of be ready for when that next surge comes, to be able to sort of jump on board and run with that. So let's have a little look at some trading opportunities for ourselves. So I'm going to go to the US dollar. Okay, here are my US dollar profile. We'll bring that up here. Okay, so I'll just, here we go. Just as I said, I have a profile set up. Here's one for the US dollar. Okay. And this is a daily charts here, and we can see that where we've had a great deal of some great strength there, okay, in the US dollar. But you've heard me talk about that for the last couple of months, and been looking at that. And so now it's a case of, well, where are we now? What are we doing now? And here's the dollar index, the latest dollar index here. So for those of you completely new joining us for the first few times, my charts are very simple, just green bullish candles, red bearish candles. I use fractals, which are the little sort of triangles you might some of the candles. I have a red 50 period simple moving average, a blue 20 period simple moving average, and a green 200 period simple moving average. Very, very simple, but I will also look to sort of draw in significant levels of support and resistance, or areas of supply and demand. So when I look at dollar index here, okay, what we had was great run up here. You've heard me, you heard me talking about that for months ago, but actually now I look at that as, as a little bit of a double top, even also call that maybe a little bit of a false breakout there. Okay, we had a little bit of a try to push above, and then we've fallen away. And it wouldn't surprise me, okay, if we took a little bit of a pause in the dollar at the moment. I think maybe a little pause in the dollar is due, and what I'd be expecting maybe is a little bit of a rally up to run around about that kind of 94.60, 94.70 area before maybe a little bit of a sort of a further move down. For those of you, I don't necessarily think it's the end of dollar strength. What I just think is that we might get a little bit of a pause here. Okay, price might just fall down here to this area, creating an inverse head and shoulders before we get a move up there. So I have a scenario that way. But I don't trade the dollar index directly myself. But what I do is use it as as a proxy for the having a look at the other dollar pairs. So, and of course, not surprised to me if I go straight to the euro dollar makes up around about, I think it's about 57% of the dollar index, or the euro itself, sorry. So here we are. We just looked at a double top there on the dollar index. So not unsurprisingly, we've got a little bit of a sort of a double bottom going on here on the euro against on the dollar. So what I'll be looking at this here is, I'm just going to let's use the wonderful mini terminal here on the Supreme edition. Okay, we'll just drag that in and put that on there to work. What I'm kind of particularly interested in is, just replicating that scenario that we just discussed there, looking at that again here for euro dollar. So it wouldn't surprise me, okay, if we saw having had that double bottom, maybe we have a just another falter down, and what we actually get is a little bit of a kind of a higher low there before price sort of maybe moves back up towards that kind of 119 region there. And then I think, once again, that actually it's going to be, that'll just be the right shoulder of a possible bigger picture head and shoulders, which may not actually roll over and fall out till after everybody's back from the summer. But, I'm just looking at a trade today. So, with that in mind, I'd look to be, a buyer around about sort of kind of the 116 area there. Okay, maybe just a little bit higher up there. And excuse me there, ladies and gentlemen. So we're just have a look at that about 116 with my stop there about 114.90, just beneath those lows, and then targeting back up towards around about that 119 area. Okay, they'll just move that up there, but around about that 119 area. So what that has me is I'm risking, if I'm looking to enter around about 116 with a stop loss of about 114.90, I'm risking about 110 pips of of trade risk for approximately around about 300 pips of profit. So that works out around about 2.7 reward to risk. That's a trade I'm happy to that's a trade I'm happy to take. It's it's what I call asymmetric reward to risk ratio. I'm risking 10 to make 27, or risking 100 to make 300, 400, 500. That's the way I particularly like to work in my trading. So there we go. Let's just keep an eye on that and see how that works out. Okay, we'll keep an eye on that. But why don't we have a little look talking about sort of double bottoms? I've been trading one myself for the last week or so, and that has been in the Australian dollar against the US dollar. So let's look at this quickly. The weekly chart, we were grinding up, okay, Aussie strength, dollar weakness, okay, up until sort of, about last year, sort of end of last year. And then realistically, what we've seen is as dollar strength come into the market, and as China has struggled, that's had a knock-on effect on the Aussie dollar, and we've seen that effect. And we had a nice break of that trend line, okay, that sort of weekly trend line. We came back up to test, which was an area around about that 76.50, 76.60 before we had over the last few weeks we had a really quite a nice downtrend. But hopefully what you can see here is, we can see that there's, once again, we had a nice sort of double bottom here, okay, and there was a couple of trades for those sort of aggressive traders. We had a couple of trades around here, okay, but there was still opportunity for us. I still like to see that. Once again, I just like to use that mini terminal, okay. It's a great tool to be able to sort of take and manage trades easily. So once again, a little bit like the euro dollar chart, I'm expecting maybe we'll come back and maybe create just a little bit of a sort of a higher low, and use that as an opportunity to sort of take a long trade with a very tight stop beneath recent lows with a move to the upside. So what I'm going to look at doing is, let's look at the move we've had so far. Okay, and what double bottom, a nice, good, strong move up, and now I'm looking at, well, what I'm really looking at is, I probably want to be a buy around about that kind of 73.84 area. That's what I'm going to look to be a buyer in. My stop's going to be beneath that low, around about sort of 73.42. Okay, that's what I'm going to be looking at, with a target up around about the sort of 74.70 area. So that's what I'll be looking at as a trade there. So, I'm effectively risking about 42 pips for a possible, profit of around about sort of 80 to 85 pips. So that gives me, a little bit of a 2-to-1 trade, and it feeds into that sort of kind of little bit of a bigger picture that, we might just take a little bit of a dollar break, okay, a little bit of a dollar pause, all right, okay. As I said, I think the bigger picture, we're still going to see some dollar strength, but it might just be over the coming summer months that we just have a little bit of a pause, a little bit of a reflex. So what we'll also have a little look at is, let's have a little look at oil as well. All right, okay, because that, not surprisingly, that feeds in a little bit to our into our dollar story overall. Okay, so it's a case of what I've been interested in. We talked about this quite a lot. Is that we've had a great trend there up in oil, and then invariably, what we had was we came to this top here in the weekly chart, and what I have here, if I just zoom in a little bit, is a case of we had this is a big weekly key reversal pattern. Okay, that's something I'm always going to take notice of. Okay, because we have to realize is for that to have happened, the bears have totally wrested control of the market from the bulls. And there's been a bit of a selling frenzy, and we had a little bit of a fallback. But then last week, last week we had a bit of a push up, and what I'm looking to do is that going to form ourselves a nice sort of 1, 2, 3 reversal pattern, which might see us for a bit of a longer sort of move to the downside. So what my trade idea on oil is that once again, just using the mini terminal. Okay, just put that on there, drag it in. It's very easy to use. Is that I'm going to see if let's have a look at shorting around about that kind of the 70 area. That's what I'm going to be looking to have a short, with the stops not surprisingly above the sort of recent highs, around about kind of 72.80, 72 sort of just 72.73 there. Okay, in that region above those highs, and then I'm looking at really targets down towards around about that kind of 58 we're looking down there about sort of kind of the 58.30 region there. Okay, so once again I'm risking around about sort of $3. All right, risking around about $3 to generate around about sort of what would be effectively about sort of $12.50. Okay, so it's just knocking around about that sort of 4 to 1 region, maybe a little bit less than that in terms of reward to risk, but it is still a very handsome reward to risk setup for my trades, and that's why I'm very happy to take a trade like that when I have got a good reward to risk ratio there. So there you go. We're sort of running out of time. We've tried to cover a fair bit there. If there's a few questions, I'll happily just take them just to finish up for the last moment or two, Jens, if we have any particular questions.
Yeah, euro dollar is a topic from one client or one participant of the webinar. Euro dollar monthly looks still very bearish, hard to long, isn't it? What's your view medium term for euro dollar, please?
Definitely. Okay, so let's have a look at the monthly chart. Okay, here. So I would agree that I would agree with the question. Okay, in that on a monthly chart. Okay, on a monthly chart, back down towards this 115. I would be my view would be to be still overall sort of backing dollar strength and euro weakness. But as I said, what I think here we're looking at here on the, let's zoom in a bit. Here we are on the monthly chart. We're back down to this kind of 115 area now. For those of you who have been trading the last few years, remember that kind of 114.50 area was real strong resistance for a while. So it shouldn't really be a surprise that we've come back, and as I said, we've got the 50 and the 20 there, and it wouldn't surprise me, as I said, if we took a little bit of a shorter term pause, maybe a little bit of a summer sort of race, as as those all those dollar bulls look to take a little bit of their profits, before they clear off on their summer holidays, and then then what we see is that kind of that move continue. Okay, as we come back in sort of into September for the remainder of the year. So I'd like to see that set up there as a little bit of a as a monthly head and shoulders, by just maybe a little rally up towards that kind of drift up towards that 119, maybe 120 zone before it rolls over and collapses down, and that's the scenario I'd be looking at. So it's perfectly possible to have a very big bearish picture, but also to once you do that, to go down to the time frames, do a little bit of multi-time frame analysis, and be able to understand and build scenarios around about what you think those particular moves may be within the market, and that can provide us with some fine opportunities, Jens. I hope that helps. I hope that answers the question.
Thanks a lot. Tomorrow is another day. Tomorrow is a new trader. So we have 5 days a week, 5 different traders. If your time allows it, just visit us tomorrow again. And if you'd like to see this webinar again, a couple of hours later, it's available on our YouTube channel as a recorded webinar. Thanks to Paul. Hope to see you all again. Greetings from Button Office and the last words by Paul today.
Thanks, Jens. Thanks, everybody. Listen, have a great week. As I said, be aware of, we're running in towards end of month, quarter and half year, but I wish you the best of success with your trading, and I look forward to seeing you next week.